Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for May the 10th, 2011. Now our first position for tonight is going to be in the iShares Comex Gold Trust, the IAU. Now we've had a fairly significant pullback in gold, and this relates directly to the gold ETF. So this is a little bit of a safer play than going into the spot metals market, particularly the gold, because it can be very, very volatile. So what we're looking at here is getting into a buy position. We can see that our three main base supports come in at 1469, 1476, and 1468 with a close of 1478. Now we've closed above all three of the Vantage Point predicted moving averages, so everything looks good there. So what we want to do here now is identify a good entry point. Now we can see here that our predicted short-term difference has hit extremely oversold territory, and it's beginning to bounce higher. That's exactly what we're looking for. We're looking to catch this move after this corrective move and then catch it on the way back up. So now that we've identified that we want to buy this, we're just now going to fine tune. The entry point should be fairly tight to where it actually closed here, because I don't expect any significant pullback. Now looking at the closing prices, we can see over the last 3 days 1438, 1457, and then 1478 today. So the market is again progressively moving back up. We've had six straight days down on the neural index. This is the first day with the neural index turning positive again. That's exactly what we're looking for here. Same with the predicted short and medium term differences. We've gone from negative 21 to negative 0.1, negative 17 to negative 14. So it appears as though the corrective move is complete and gold is getting ready to start its move back up again. Now, potential targets for this, we're just going to bring that back to our daily report here for a moment. Now our entry for tomorrow is going to be 1465. Day traders, you're going to be looking at 1485, 1490. But your medium and longer term traders here, looking at this chart, we should certainly, I would think, in the days and weeks ahead, easily be able to push over that 1500 mark. I would think we can see these two lone candles up here close to the 16 mark. That would be, for a medium term trader, that would be a target I would be looking at, because it looks like gold is going to continue its relentless move higher. We've had a substantial correction, and again, we're going to use this as a buying, this little dip here, we're going to use that as a buying opportunity. So that's our first position for tonight. Now our second position for tonight is going to be in the foreign exchange market, specifically the US Canadian currency pair. Now this one's going to be a little tricky. We've got our commodity prices volatile again today, but crude oil particularly volatile, moving up 4 to 6% today, putting a little bit of pressure on the American dollar against the Canadian dollar. But I think that any move up in crude oil is going to be very limited. That's my preference, looking at the Vantage Point software and some of the other fundamental factors in the market. So for now, we can identify some key levels. We've closed at 96.24, 96.34, 95.98, and 95.98 are the Vantage Point predicted moving averages. So you can see that we've got a fairly substantial amount of support starting to build around that 95.89 area. Now, looking at the Vantage Point crossovers, we can see the short-term crossover has actually been pushing higher for several days now. The medium-term crossover is also supportive, as is the long-term crossover. So we should still have room for one further move up. Now, once we've identified this, a bit of a concern for me is this predicted short-term difference is coming off somewhat overbought territory and pushing lower back towards that zero line, but it hasn't crossed that zero line. So I think that this upward momentum on the US Canadian pair is going to last for a few more days. That's what I would anticipate, depending on crude oil. So now what we're going to do is we're going to go in and look at the Vantage Point daily report. We can see we have the neural index is down, so we would expect it to move lower. Now we have two potential entry points for tomorrow. Your more aggressive traders, I would be looking at the 18-day predicted moving average from Vantage Point that comes in at the 95.98 area. For your less aggressive traders, I would be waiting for a pullback a slightly deeper pullback towards the 95.65 area based around the neural index and the fact that we're at that short-term crossover, that with that spike in crude oil we've lost a little bit of momentum to the top side. But the one thing I do want to point out though is that with the Canadian dollar today against the US dollar, it's actually moved up quite high. We've hit almost to the 97 level today, so it looks like we have room for at least another day or two for this to extend higher, and then we have to wait and see if the triple EMA cross will complete and this buy signal will continue to form from a longer term standpoint. But from an intraday standpoint, short term counter trend long still look pretty good here. The predicted true strength indicator from Vantage Point crossing over the trigger in heavily oversold territory, as is the predicted MACD, and then you can see that this crossover making its move to the upside also. So there's a nice three-way confirmation there, and that's what we're looking for. So those are the market positions for May the 10th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.